Okay, good evening, guys. Let me hope all of us are in good health. So today we're going to talk about, we have started the course of Forex trading, and we shall go by Baby Pips School of Philosophy, and here it goes. So we get started as it says, and we shall start with the what is Forex, and which we need to know about that as we proceed. So what is Forex? Think the stock market is huge. Think again. Learn about the largest financial market in the world and how to trade in it. What is Forex? Learn about this massively huge financial market where fiat currencies are traded. I repeat, this is the massively huge financial market where fiat currencies are traded. A massively huge financial market where fiat currencies are traded, and then what is traded in Forex? Currencies are, are the name of the game. Yes, you can buy and sell currencies against each other as a short-term trade, long-term investment, or something in between. So you can do it on a short term. There are those who do it on a flip module, and all the scrappers, kind of stuff, and buy and selling currency pairs. The first thing that you need to know about Forex trading is that currencies are traded in pairs. So these currencies are traded in pairs. You should know that. Okay. They are traded in pairs. Buyers. Forex market size and liquidity. The Forex market is huge, as in huge, and that comes with a lot of benefits for currency traders. How to trade Forex. Some of the more popular ways the traders participate in the Forex market is through the spot market of futures, options, and exchange traded funds. Options, throats, and futures, and exchange traded funds. How do you trade Forex? Now it's time to learn how to lake in the Mora. Though we diversify into much more are the options. Since it is the futures, options, and exchange traded, we always think of the options and exchange traded funds. Well, that's what we basically aim at. You get the point? Yeah. So how do you trade Forex? Now, this time to learn how to like in the Mora, how to make money trading Forex. What is Forex trading? How does Forex trading work? What you need to know on how to get started in trading Forex. You get? So there are do's and don'ts that you should always never forget about. This is what we're trying to say. And know when to buy or sell a currency pair. Let's start with the very basics first. What drives the value of a currency? What is a pip in Forex? You have probably heard of the terms pips, pipettes, and lots thrown around. And here we are going to explain what they are and show you how their values are calculated, because you've ever heard of the pips, pipettes, lot sizes thrown around, and here going to explain. So we have to explain more about them. You get? What is a lot in Forex? How many units of currencies can we trade? That is a lot. The lot means the number of units that you can trade in a specified given currency. What size what size position can we trade, and what are they called? Units are currencies. How many units of currencies can we trade? What size position can we trade, and what they are called, right? That is a lot. It's like the size of a unit for each currency. That's the lot. What is spread in the Forex trading? What is spread? Spread when trading Forex. What is spread when trading Forex? I don't know. And no, it's not the kind of spread you use in sandwiches. Spread is something different, you know. I don't know. Let's try to check it up here. What is spread in Forex, and it's basics. You get something different. Let's check it here. Forex buyers will quote you to different prices for currency pair, the bid and ask price. You know, spread is into different stuff. So the bid and the ask price. The bid is the price at which you can sell the base currency. You know, is the price at which you sell the base currency. Now remember, there is a difference. There is a broker in this game. So you're trying to sell to a broker in order to cash out your money for the base. So you sell what you have to the broker, that is the bid. So the bid is the price at which you can sell to the broker, you know. So your base, let's say you are trading euro against USD. So if the base is USD, that means is the price at which you can sell the USD to the broker in exchange for euro and cash it out. You know, that's what it is. It's like selling to the buyer for a car for liquidity. And the ask is the price at which you can buy the base currency. You know, the ask is like when you buy from the broker, and the base is when you sell to the broker. Get the point? That's the fact. The difference between these two prices is known as the spread. So the spread is the difference, you know. Also known as the bid against the ask. So if the bid is euro, the ask is the USD. So you either buy the USD, and after buying the USD, you can sell it back for euro and then cash it out. Or if not, you can buy the bid. Yeah, you can sell the bid and then cash it out from the broker. Or if not, you can sell the bid and cash it out to the trader. You get? So it's like when you sell the bid to the buyer, to the broker, and then they ask you buy it from the broker. That's it. The spread is how no commission brokers make their money. You know, the spread is how no commission brokers make their money. This spread is the fee for providing transaction mediancy. This is why the term transaction cost and bid ask spread are used untouchably. You know, instead of charging a specified fee of making a trade, the cost is built into the buy and sell price of the currency pair you want to trade. From a business standpoint, this makes sense. The broker provides a service and has to make money somehow. They make money by selling the currency to you for more than they paid to buy it. You get? And they also make money by buying the currency from you for less than they will receive when they sell it. You get? This difference is called the spread. So the difference is what is what actually goes to the broker. So when you pose in a bid to sell to the broker, there is that charge that is charged from you is the spread. And when you press in a ask to buy from the broker, there is that charge you are charged. So it is what the spread is to the broker. You get? So in simple terms, the bid is when you buy the bid is when you sell to the broker, and the ask is when you buy from the broker. So the difference of the money made in return is what the spread that goes to the broker. Hope you understand. What type of spreads are in the Forex market? You can look into your fixed, variable, also known as floating. Fixed spread. What is fixed spread? Fixed spread are usually offered by brokers that operate as a market maker or dealing desk model, while variable spreads are offered by brokers operating in a non-dealing desk model. You know, fixed spread are for those that are brokers that are operating as market maker. or dealing desk model. So these are brokers that interact straight with the markets. Markets, those are probably the governments and market funds and whatever, stocks and whatever. So these deal direct with the suppliers, and there are those that deal as intermediaries. They come and hook from these fixed spread brokers. Those are called the variable spread brokers. So the variable spread brokers get their funds from the fixed spread brokers. Very simple. Are usually offered by brokers that operate as a market maker or dealing desk model, while valuable spreads are offered by brokers operating a non-dealing desk module. You get the point? What a fixed spread in Forex? You can also look into this in your free time. Fixed spreads stay the same regardless of what market conditions are at any given time. In other words, whether the market is volatile like Kenyan moods or quit as a mouse, the spread is not affected. It stays the same. So it's like a tax. So that tax is either taken whether you've made a profit or not. Simple. That's how spreads are made. They are variable spread brokers and the fixed spread brokers. So the fixed spread brokers are more to deal with because they deal direct with the market, with the market sources, operate as a market maker, and also deal desk. So the others are non-deal desk kind of stuff. So the bid is when you sell to the broker, and the ask price is when you buy from the broker. You get? So that's the difference between bids, between a bid, an ask, and a spread. The spread, we have a fixed spread and valuable spread. Fixed spread, they are market makers, and they are market makers, and also dealer. They are market makers or dealing desk model. All the others are non-dealing desk modules. All right, that's it. We go back to our point. That's the difference between floats, and we shall also look into what is a lot. Let's go talk about what is a lot in the Forex market so that we understand. Forex is commonly traded in specific amounts called lots, or basically the number of currency units you will buy or sell. You get?